markets are again seeing some selling pressure. We're holding though at around 10,760 odd. We've moved lower after seeing a bit of a recovery. But let's get chatting with a couple of managements. Dixon Technologies, that's the stock on our radar. On the back of the company is, they're meeting investors, customers as well. That's currently underway, I believe. The company, in its meet, will unleash the complete 2019 lineup of its latest and future products. To discuss that in detail and what's the outlook going forward, we have Mr. Atul Lall, the MD of the company, who joins us. Hi, Mr. Lall. Thanks so much, sir, for joining in. In the last few months, we've been hearing about a slowdown. Is it due to off-season or is it due to high inventory? And have you seen a slowdown in terms of orders?
So in the various verticals, the scenario is slightly different. I see a very strong order book in washing machines. In this current quarter, the fourth quarter of this fiscal, I see a very good order book in televisions as well and lighting as well. I see some kind of a small flattish sale in mobile side. In security surveillance system, also the order book is very good.
Okay. Mr. Lall, if you could give us the breakup of your total order book when you say that, you have a strong order book in washing machines as well as televisions. How much of your order book is comprised of these items? We understand majority of your revenues come from washing machines as well as televisions, which accounts for about 40%.
So we feel that in this quarter, we should be clogging a sale of around 190K to 200K of washing machines, which will be generating a revenue of around 90 to 100 crores. In lighting also, I feel that we should be clocking a sale of around 270 to 280 crores. And in televisions also, I feel it should be around 300, 325 crores. So
and when you say this quarter, you mean the fourth quarter?
In the fourth quarter. In mobile phones, I'm still, although the financials are going to be better, but we need a very solid anchor customer. And in security surveillance systems also, the order book is very healthy. I think we should clock a sale of around 150 crores.
All right, Mr. Lall, I remember earlier this year, you all were talking about shifting one of your production facilities from Dehradun to Tirupati. And it was to reduce the dual cost structure. And that was likely to be margin accretive. Has that happened? Will we see that play out?
Yeah, so that has already happened. Our operations for television production are on full gear in our Tirupati factory. Right. The Dehradun production is already stopped. And also our production of cameras and digital video recorders for security surveillance systems has started. Now it's in a ramp-up phase. It should touch a level of around 500,000 cameras and 150K DVRs by March this year.
Right. Mr. Lall, the street was believing that once this happens, your margins stand to benefit from this as the dual cost structure comes off. Last quarter, you did margins of close to 4.7%. You've guided for 70 to 80 basis points improvement in the margins in FY19. Do you hold that?
We feel in the current quarter, there would definitely be an improvement in the margins.
By how much?
It's slightly difficult to make that prediction, but I'm very sure that there will be a significant improvement in the margins in the current quarter.
Okay, so we'll wait by for that. A quick counter question, sir, in terms of you shifting your production facility from Dehradun to Tirupati. What happens to that facility that you had at Dehradun? Is there some value out there? Is there a land that you have or a building facility that you can sell, or you plan on setting up a new unit here?
So Dehradun facility, in which we had both television as well as lighting production, is completely now a lighting facility.
Okay.
And the capacity utilization of that plant in lighting is already at around 85 to 90%.
All right. Talking about capacity utilization, give us the capacity utilization of the different verticals.
So in the current quarter, lighting should be at around 85%, 80 to 85%. Washing machine should also be at around 80%.
Okay.
And television should be at around 65%, 60 to 65%.
Okay.
Mobile is lower. And in the security surveillance system, we are in the ramp-up phase. So the order book is for more than 100% of the capacity.
Let's talk about your mobile business. You know, the capacity utilization out there is lower. You were talking about some anchor customer. For your LED TVs, you have Xiaomi, you have Flipkart, you have all the other players. No one talking to you in mobile?
So mobile, we are still in the discussion mode. In mobile business, we've already started our PCB operation, which I talked about earlier. That operation has started from last month, so that helps in the financial and expanding our margin. And we are in discussion with the various large customers. We hope that we'll be able to conclude something shortly, but at present, we don't have that large anchor customer in our mobile business.
What's your share of revenue coming in from OEM versus ODM, and is there a margin differential between the two?
There is a margin differential. There is definitely a margin differential. So across various verticals, let's say in washing machines today, 100% is ODM. In lighting, it's almost 70 to 75% now ODM, which used to be hovering at 45% last fiscal. In televisions, we are at around 8 to 9%. A large part is still OEM. In security surveillance systems and mobile phones, everything is OEM as of now.
What's the margin differential out there?
So margin differential is in television, it's around 200 BPS.
All right. Mr. Lall, you know, currently your customer meet is underway where you talk about your few new futuristic products, etc. Last time you joined us, you said your revenue growth would be 23% in FY19. Thereafter, you lowered it to about 15%. What is your revenue growth likely to be in FY19? And after these meetings and your new products coming on board, what is your expected growth for FY20 along with margins?
So I feel that FY19, I still maintain that we should be able to hit around 15%, which I had mentioned earlier. And I feel that we should be in the range of around 18 to 20% in 2020.
With margins of?
I feel that margin should be upward of around 4.5%.
Okay, all right, Mr. Lall, thanks so much, sir, for joining in and looking forward to speaking to you all through 2019 as well. But let's move on then. Aichi continues to trade in the red. It's down close to around 2% odd. Remember, yesterday the stock was down close to around 9% after auto sales numbers hit a rough patch in December. Now, we spoke to Mr. Vinod Agarwal of Aichi Motors, and he says that the axle load norms have impacted sales of heavy-duty vehicles. He also adds that a lot of financing has been curtailed by NBFCs. Let's hear him out.
If you look at the commercial vehicle industry, last 2 months the industry has experienced some stress, and that stress has been basically led by the the financing liquidity crunch. The NBFCs are under stress, and a lot of financing has been curtailed by them, and used truck financing is also under strain, and at the same time there is some impact of the axle load norms. So as a result of that, the CV industry last 2 months has dropped, especially in the heavy duty trucks. If you look at the light medium duty trucks and the buses, those are almost flat, but the heavy duty trucks have dropped significantly in the haulage sector. Within heavy duty trucks, the tippers are doing very well. So the positives are construction segment or the infrastructure segment, that's continuing to do well. I am still expecting that the last quarter you will not see the numbers as were there last year. But nevertheless, still we will have a good last quarter, and overall for the year, I still expect there will be growth even in the heavy duty trucks. In weak commercial vehicles, in first 9 months, we are still growing by 22%. So we are having good growth in this year. And last quarter, also there will be some growth because we are continuing to do well in the light and medium duty trucks. We are continuing to do well in buses. We are continuing to do well in coal mining trucks. So we would see good growth.
Welcome back. Just keep an eye out on the markets. We're at the low point of the day, the Nifty as well as the Sensex. Sensex now down 100 points. The Nifty closing in on that 10,750 mark. A lot of stocks. HDFC Limited is the one which has dragged the Nifty lower. Along with that, we have Yes Bank, Kotak Mahindra Bank, as well as ONGC. All of them taking the key index lower. What we do is take a short break, come back. We get you snippets of our exclusive conversation with Chetan Iyer of Morgan Stanley, as well